Hi guys, how was your weekend? I hope it was great. Good afternoon from sunny but kind of chilly Plattsburgh. We're gonna cover again what you submitted up to last night and talk about what we have this week. We're getting closer to the end, all right? And again, as I've said before, no matter what's going on, let's try to finish as strong as possible, okay? Stay positive. Today, chapter 16, and I'm going straight to the chapter 16 because I don't have any feedback about LO 15 other than, again, thumbs up. Great job, okay? Chapter 16, General Health Fitness Management. So, when you're managing a fitness based facility, of course, you have to know what you're supposed to know. You're an exercise physiologist, right? You have to know exercise physiology, but at the same time, you have to know, in general, the fitness industry, human resource management, some basic financial principles, and some basic facility operations. Okay? And today, I don't want you to freak out. We're going to cover this. We're going to go slowly, just the basics. We need some basic information to be known and you to be able to understand and use it. Okay? Human resource management. The human resource management their goal is to recruit and retain the best possible team, and their end goal, of course, is to create repeat business. What is repeat business, you're asking? Well, is having the same clients again and again, and that shows a lot of things, but from a cost perspective, it's very efficient, right? Instead of trying to reach out all the time and trying to find new clients, as you understand. When you want to staff and recruit, first of all, ask, what do we need? Okay, and table 16.1 gives you some sample job titles, pretty frequent job titles in this industry. Now, what's the difference between an employee and an independent contractor? Employee, usually one way to distinguish is somebody who doesn't have a lot of saying on how he's going to perform, what he has to do in order to reach a goal. And independent contractor has control over. So in an independent contractor situation, the employer has control over the results only. Another way that's known in the book, it has to do, with benefits. An independent contractor doesn't usually have benefits. It just it's a different situation overall. But what do we need? Do we need full-time employees or independent contractors? Do we need exempt or non-exempt? Exempt, base salary; non-exempt, no base salary, paid on an hourly basis. So exempt, even if they work overtime, they don't get paid more. They won't get paid more, right? Non-exempt, the more they work, the more they're getting paid. That's important for you when you're trying to figure out and manage your facility, how to manage your facility. Job description, it has to be really clear. And I have a background in this industry. I have my own gyms and other fitness-related businesses in Greece. You have to be very clear about what you want. That's why, first of all, you try to figure out what you need, and then you try to describe what you want as clear as possible. Why? Because you are trying to attract the best talent. You're trying to attract the people who are the best fit for that position, right? So once you have described, you can just send it out so you can start recruiting. And there are examples in the book that you can see. Now, recruiting, as we said, what kind of strategy? It can be internal, from the inside, external. It can be via career centers, through internships. The idea, again, is to find the best, but while you're doing that, spend the least amount of money, okay? And in order to attract the best, you have to find the best medium. So who is using the whatever website? You want, like Indeed, higher ed jobs in my profession, or Bluefish is big in recreation. So which website you're going to go, because you're looking for specific people. These specific people are going to go there, right? Are you going to post it where exactly? So you need to know your target group, you need to know your audience. The selection process now. Sometimes we have a committee when we can. When we have more people in the committee, usually we have less bias because we have more opinions, right? And first we check the application, who meets the minimum requirements, then who meets the preferred qualifications. We create a list. If you don't usually meet the minimum requirements, nobody's going to call you. If you do, then they start calling people, they check for references, they start calling people, they may call those applicants that move to the second phase or Skype with them, and then maybe we need a second phone call, right? You do the first one, and then a smaller group moves to the third phase, which is a second interview, phone interview or Skype interview, and then maybe there you invite your supervisor as well. So there are different ways to do it, but definitely there are stages from the whole pool, you move to a smaller pool, until you have in mind 2 or 3 applicants and you're actually actively trying to recruit them, okay, and to negotiate. Compensation, we don't usually talk just about base salary. We just talk, there are what kind of benefits, what kind of perks. Do you get 20% into this if you are hired in this gym, and 30% of this? Like, there are a lot of things that can attract a person, not just salary. Now, orientation. Once you get hired, they bring you in. A good orientation is important because then you need less time for training, less cost for training, and less people are just quitting or not coming to work on time, So it's really important, and most of the time, if there's a huge organization, human resource, the Department of Human Resource Management, HRM, will do it, and they have to explain, the structure and, of course, cultural organization of the business, policies and procedures, what's your responsibilities, what's your expectations. This is your workspace, this is the kitchen, these are the other co-workers. So they're trying to give you the best idea about what's coming and prepare you for starting whenever you need to start. Now, performance management and how you can retain your employees. The expectations should always be very clear, right? And when you were setting goals, the manager has to talk with each employee, if possible, and explain to each employee what's his or her role in achieving those goals. So they need to know what is expected from them. We talked about SMART goals, and you can see an example in table 16.3. Now, the appraisal of the performance can be formal, and it can also be informal. It can be positive, and it can be negative. At the end of the day, whether positive or negative, the employee should use it to become better, right? But the key performance indicators, like based on what am I evaluating you? How many packages you closed this month, based on feedback from the patrons, based on feedback from your and you have to have some numbers. I need 2% more of this, 3% more of this, 5% less of that. Okay, so the other person knows exactly that the other person knows, so the indicator, the performance indicator is predetermined and it's clear. Whether formal or informal, all evaluations should be documented. That would be great for you if you are a manager, right? Now, how do you retain? Do you want to retain? Do you want to retain? Your employees? Of course, right? It costs a lot of money and time to reach out again and do the whole process and bring them in and orientations and training, and your patrons are getting confused. So it's efficient in many, many ways to retain your employees, and you want to retain your employees. And it's been proven that if there is frequent performance appraisal, there's higher retention because they don't get surprised one day whether they're doing well or bad, especially bad. Risk management is a very critical area, and the goal, of course, is to recognize, eliminate, reduce, or transfer that risk. There are many different kinds of standards and guidelines. You can see ACSMs at table 16.4. risk management team is part of the emergency response policy, and it's in charge of actually creating that policy and implementing that policy. And table 16.5 gives you a lot of suggestions and guidelines that has to do with this specific topic. Now, what is your role as an exercise physiologist tomorrow when we're talking about facility management and operation, right? There are different, there have to be operation standards that should be enforced concerning access. You have pools, saunas, steam rooms, supervision, and everything. When it comes to equipment, you have to buy the right equipment. It has to be clean. It has to be well functioning, right? And you have to have clear records of when you serviced all your equipment, and you have to be part of your job is to explain to the patrons how to use it and how to not use it. Now, when we talk about fiscal management, a lot of people freak out, and I always say, even in my sports management class, we need some basic accounting literacy. That's all, right? We need to understand when we see a report what it means and create a report if possible. That's the goal of this video as well. So through accounting, we record all financial transactions, we analyze them, we report the results, so we have financial records. Based on those financial records, then we can make decisions, or the person who's in charge can make decisions. You as a manager of a fitness facility, right? Your accountant gives you some reports. What are you going to do with them? So we have cash accounting that has to do with transaction when the money are paid or received, and we have accrual accounting, so when they occur. So every month, credit card will be processed for that member because they're paying by month, right? That will be accrual accounting. Yeah, the cash accounting will be whenever the money is in your account or in the account of the facility that you're working. So it depends on how you see it. Most popular, accrual accounting. Okay, that's how we work. All right. Financial statements. Let's start with a balance sheet. I'll break it down so it's easy for everybody. We have assets, mainly, and liabilities, and then we'll have equity. Asset, something that adds value in the organization. We have fixed assets that are acquired for long-term use, and we have current assets that it can turn into cash in less than 12 months. So in other terms, they have high liquidity. Okay? Liability is something that takes value away from the organization, the business. We have current, which debts to be paid in less than 12 months, example taxes, and we have non-current that we don't have to pay them in a year, let's say a loan. So they're distinguished and they're grouped in the sheet. And then we have equity, which is the owner's investment plus profits minus losses. You can see an example in our book, and hopefully it makes sense. More statements, and profit and loss statement, also called income statement. You can see figure 16.2, right? And now what we do is revenue minus expenses. So we can see, did we end up with profit or loss over a specific period? Let's say trimester or a whole year. Okay, expenses, right? So we have the expenses and we have the revenue. Revenue minus expenses, it's either going to be positive, profit, or negative, loss. Budgeting. Budgeting, of course, is essential, and what it is a projection. That's what it is. It's a projection, usually for a year. And we have different budgets. If you just started your business, you have a zero base because you don't have a year before you to actually base the budget for next year. So you just assume, right, based on the market or your experience with other businesses. And the trend line is you use last year's budget to create this year's budget, and then the next year's budget, and so on and so forth, right? So you use a year before. Now, in order to create, we need 4 steps at least, as our book says. We need to determine the limitations. How much money do we have? How much personnel can we have? How much space can we have? All the limitations. And then forecast revenues based on whatever is going on in the market right now, like for example now, right? And what happened last year? Forecast expenses, same way, and then put them together and project profit or losses for next year. Now, can we make adjustments as the year goes by? For sure, for sure. It's just a projection. That's what a budget is. This is what we have, this is what we want to do, and this is how we're going to spend the money, and that's what we're expecting from that. But it hasn't happened yet. So if things happen, you can make adjustments and move money left and right. Income management. So all the revenues that we talked about right now must be tracked. Dues, fees, food and beverages. Are you providing any other services? For example, are you selling any supplements? Are you making any protein shakes, any bars? All this have to be tracked throughout the year or throughout the period that we're talking about. And how do you collect and manage all these revenues? That's an important information that you need to address. And what do you do if you have delinquent accounts? Yes, I should pay April 1st, May 1st, but my card didn't go through. What do you do? That was something that you expected, right? Accrual accounting. And as we're going towards the end of this chapter, we have expense management. Of course, it's very important for stability, and we have variable expense that is changing based on usage. So if people shower more, you pay more for water and more for soap, and you have fixed expenses that your rent is pretty much fixed. It would be great if you could change the fixed one, but it's hard there. So usually we focus on the variable one if we can. And in general, we're trying to eliminate excess spending. Through 4 steps, we try to obtain at least 3 quotes about anything we're trying to buy, eliminate unnecessary expenses whatsoever, contract out services, or as it's called in managerial economics, outsource, right? If you offer towels and you can wash them, somebody else is washing them for you and bring them to you, and that way you don't have to make a big investment, but also it's cheap and so on and so forth. And use internal resources whenever possible. If you can do something internally, do it internally. If you can, try to find the cheapest solution to outsource. That's all for today. I just want to make sure we understand that being an exercise physiologist is not enough when you're managing a facility, and you have to have a basic knowledge of how to operate that facility, how to read at least some reports, and that you need to know the whole fitness industry so you can adjust and be a successful manager, and of course, obviously, an exercise physiologist. That's all from me for now. Have a great week. Let me know if you need anything. And in the meantime, although we're going through very hard times, lift intentionally, not habitually. Bye, guys.